Hello everyone, a very good morning, good afternoon, and good evening to all of you. I hope you are doing well. In today's session of JForex indicators, I, Vaibhav, will be explaining to you the pattern named as a closing Marubozu. This is a Japanese word which describes a pattern in which we have a long candle body if it has started the day lower and goes on to close higher. Its opening and the closing price also coincides with the high and the low of the day. There is not much of a shadow, negligible shadow on both sides, and that's why it is called as closing Marubozu. It can be bearish or bullish. This is a continuation pattern, and this formation kind of signals a strong convictions from the market participants as the price goes on to close closer to its high on the rise. If it is uptrend, its closing price is almost as high as its highest point of that particular candle period. And if it is the bearish market, then we have the closing price which is nearly around the lowest point of that candle period. So this is a pattern which forms when there is strong conviction amongst the market participants that the underlying trend, whether it is bullish or bearish, is likely to prevail, and it also signals that this is likely to continue, and we might think about getting involved, or if we have already taken the trade, then adding to the position. So this is a continuation pattern which we can try to optimize our trade, which is likely to more profitable for us. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart, and I have defined the candle period at 1 hour each. And let's add these closing Marubozu. All you have to do is do this quick search using the F4 option. Here it is. Now, if we look at today's formation, we have these three instances where the pattern is being recognized on the chart, and we will have to determine which one to rely on and which one to overlook. As I said, we need to pay attention to the shadow and only the candle formations in which there is negligible shadow on either side should be considered for the new trade. So in this case, we have long shadow on the, not that long, but it is still fairly long enough. Even in this scenario, we have long shadow on the upper side. But if we look at this particular candle formation, the shadow is not that long and it is a continuation pattern. So we had this prior strong uptrend. The price again goes on to retest the lower point, and from there on it goes on to rally again. So this might have been a good instance to go for the entry while keeping the stop loss just little below this lower point. Significant enough buffer should be provided below this immediate low point, and this trade could have been taken. Again, we have to consider the other formations. This is a good example of closing Marubozu. On the chart, you will always have to consider the average volatility prevalent in the recent candle periods. Depending on that, you will get the criterion how long is good enough. As I said, we need this candle body, the real candle body, to be large enough. So how large enough it is going to be is always going to be a relative phenomena, because we will have to consider the average volatility, and based on that we will be able to judge if the conviction of the market participants is strong enough or not. If we see that the real body of this particular closing Marubozu candle is larger than the average volatility, average length of the candle, then that signals that there is increased conviction amongst the market participants of the existing trend, and that signals that the current trend is likely to be sustained in near future also, and that can be utilized as the criterion for determining whether to go for the trade or simply to sit on the sideline, because going against the trend is not really advisable, as in the general parlance trend is your friend. Now let us look at some more examples. And I would say that not all the patterns which are being recognized on the chart should be used. We will always have to pay attention to these relative length of the candle in comparison to this volatility. So using that, some of the trades could have been overlooked. And if you feel that the single candle formation is not going to be reliable enough, you can even think about giving it some more time. And if in the next couple of candle periods we don't really see the price reversal against our existing trend, which is being defined by these closing Marubozu candle formation, we can go with the flow and try to take the entry as close as possible to these lower point of this shadow. And if we are looking at the bearish closing Marubozu, then for the new trade entry, the higher point of the candle can be utilized as the optimum entry point, while providing the stop loss with a good enough buffer just above this immediate high point of that closing Marubozu candle. So in this kind of formation, your stop loss is not going to be wide. It is going to be quite sharp and with quite significant risk reward ratio. As your stop loss is going to be sharp, you can keep your target price quite wide, and that is going to get you a risk reward ratio exceeding 1 is to 2. Now let us look at some of these formations and see how many times it has been successful and how many times it has failed. And for assumption, we will consider that all these formations are meeting our criterions also. So in this case, we saw this formation continuing and we saw this steep decline. So this would have been a profitable move. Again, this time around also a profitable move. In this case, we saw the price holding for next couple of candle and then reversal full, and this would have ended up in loss. This again in profit, this also in profit, this time as well profit, here also for a significant amount of time. The price move is not large enough, but still it did hold on the upper side. So again profitable, this instance is also profitable. This it would have ended up in loss. Again in this instance profit, here as well profit, in this particular case loss. And now there is a unfolding scenario. Only one candle period has passed, so we have this still open trading decision. And I would say that if you have to go for the short sale trade, the opening price should be as close as possible to this high point, while providing the buffer on the high point or just little above that. So that will get you a quite good risk reward ratio with a very sharp stop loss. So we saw these multiple instances of the occasions the trade generated would have ended up in profit. On some of the instances, there is also the possibility of loss. And as is the case with any formation, it is not going to be profitable all the time. We always have to keep that in mind, that some of these trades are also going to end up in loss. So we always have to plan accordingly, get our risk reward ratio right, and in the eventuality of the trade ending up in loss, we shouldn't be losing too much money. So that is always the part of risk management, and it should be given attention to. Now let us see what we can do in terms of its editing. There is nothing we can edit on the input side, so this option has been disabled. For the output, we can go for the color combination of our choice. So if you like brighter colors or even white color, you can opt for that particular formation. You can even go for two different color combination for signaling the bullish closing Marubozu and bearish closing Marubozu. So if we opt for two differing color combination here, you can notice whenever these two formations are shaping up on the chart, these are being denoted by different color combinations. So it makes it much easier for you to see which type of pattern is forming up, and since there is a continuation pattern, it will be easier for you to decide the trading entry point as well. Styling the bracket, or you can even go for the full shading of the candle. I think the bracketing style looks much better. That's my personal view. You can always change it. If you feel that this is looking too prominent on the chart, you can increase the transparency, and that will make it look much less prominent on the chart. Advanced, recalculate on new candle only. Since there is a single candle formation, this is not going to make much of a difference. Highlight the time period zone. This is a single candle formation. Again, I am repeating. The calculate from custom data, this has been disabled as we can't really customize the input values. Show indicator on all the periods. Suppose if you want it to be available whenever you change the chart's candle period, you can opt in for this, else you will have to specify on which particular candle period it should be available. Only on those chosen time frames it will be available. So now that I have opted for 5 minutes and hourly, only on these time frames you will see it. But for example, if I change it to 10 minutes or any other candle time frame, it is not going to be visible. You see, so this feature helps when we have multiple indicators being added on the chart to gather more data points while deciding whether to go for the trade or not. So that particular feature is helpful in that context of gathering more data points while making the trading decision. Now I am again opting in for show indicator on all the periods. All right. So these are all from my side for today's session. If any of you have any query or any idea to share regarding this candle formation of the closing Marubozu, do write to me in the feedback, and I would be more than happy to take the discussion forward. And I would also like to make you aware of a new feature which has been added on the platform. This is the hotlist feature. You can enable it going to this view and simply clicking on this option. And in this feature, we have these active stocks in the list. Whichever stock is gaining or losing significantly for that particular time frame will be shortlisted and shown on this list. Now here, this is for last hour. You can change it to get the stock list for day, for week, for month, for 3 months, for 6 months. So all these options are there provided on the chart, provided in the list. So whichever is the active stock, you can go for the tracking and then define and determine whether to go for the trade or not. And it is always better to trade with the more volatility, as